In class 11th, we have learned about final accounts. In final accounts, we prepare three types of accounts, that is, trading account, profit and loss account, and the balance sheet. The gross profit that we get from the trading account is transferred to the profit and loss account, and the net profit that we get from profit and loss account is then transferred to the balance sheet. A partnership firm, like a proprietorship firm, also prepares trading account, profit and loss account, and a balance sheet. But in addition, a partnership firm also prepares profit and loss appropriation account. To the profit and loss appropriation account, the net profit from the profit and loss account is transferred. It is prepared to show appropriations of net profit, that is, distribution of net profit for the accounting period towards the partners. The distribution could be in terms of interest on capital, partner's salary, partner's commission, or any other type of appropriation towards the partner. Therefore, in profit and loss appropriation account, only the transactions relating to partners are recorded. Any transaction which is not relating to the partners is not recorded in the profit and loss appropriation account but is recorded in the profit and loss account. Therefore, items like discount, depreciation, insurance payments will not be coming in the profit and loss appropriation account but will be coming in the profit and loss account. This is the most important thing to remember while preparing the profit and loss appropriation account. Like for example, if salary is paid to the partners, it will come in the profit and loss appropriation account. But when the salaries are paid to the employees of the firm, it will not come to the profit and loss appropriation account, but it will go in the profit and loss account. Profit and loss appropriation account is just an extension of profit and loss account which deals with appropriations of profit among partners. Let's have a quick look at the format of profit and loss appropriation account. Profit and loss appropriation account is prepared for a period of time and not at a point of time. Also, profit and loss appropriation account is a nominal account. Therefore, the rules of nominal accounts will be applied to it. That is, credit the income and debit the expenses. Remember that the profit and loss appropriation account is an extension of profit and loss account. Therefore, profit and loss appropriation account is also prepared from the firm's point of view. So you will consider the incomes and expenses from the point of view of firm and not the partners while preparing the profit and loss appropriation account. Now let's understand the various items that comes in the profit and loss appropriation account. Interest on capital. When a partner provides capital to the firm usually pays a percentage as interest on capital. Since this payment is from the firm to the partners, it is an expense for the firm and expenses are debited. Therefore, you will debit interest on capital in the profit and loss appropriation account. Interest on drawings. When a partner makes a drawing out of capital, the partner will have to pay interest on the drawing. Since the payment is made from the partner towards the firm, it is an income for the firm. Therefore, you will credit the interest on drawings received from the partners in the profit and loss appropriation account. Partners' salaries and commission. Paying salaries and commission are expenses of the firm. Therefore, it will be debited in the profit and loss appropriation account. Transfer towards reserves. A firm may decide to transfer a percentage of net profit to the reserves. Reserves are the amount set aside out of profit to strengthen the financial position of the firm or to meet the future unforeseen liabilities. Transferring the profit to the reserve, you will have to debit the profit and loss appropriation account. Finally, if your credit side is more than the debit side, this means you have a divisible profit. Transfer this divisible profit to the partner's capital account. And if your debit side is more than the credit side, that means you have a divisible loss. Also transfer this divisible loss to the partner's capital accounts. A question may ask you to make adjustments relating to items of profit and loss account. Be careful and do not do such adjustments in the profit and loss appropriation account. While preparing the profit and loss appropriation account, you should already have the figure of the net profit. That means you have already prepared the profit and loss account. So if any additional information relating to profit and loss account is given, then you first make the proper adjustments to the net profit and then start preparing the profit and loss appropriation account. For example, if an adjustment relating to items of repairs and maintenance is given, then first make proper adjustment to the net profit and then start preparing the profit and loss appropriation account.